Weather patterns are changing, and that could have an impact both on herd size and cattle prices. We have more in this week's Market Watch.
Market Watch.
And Troy Applehans with CattleFax now joins us. Troy, we've seen a shift in weather patterns, at least in some parts of the country throughout the spring months. What is that meaning in terms of cattle prices across the country?
This drought's been pretty relentless, over the past several years, particularly in the southern plains states and western states in particular. It's been devastating to California in particular over the past year. Seems like east of the Mississippi River, conditions are pretty good. Obviously, there's a pocket in there from like Montana to Wyoming into the Dakotas that looks pretty good, but the remainder of the country still remains in a pretty severe drought. And obviously that's had some impacts in terms of producers being able to expand their cow herds or add to the herd in these regions. But I think if we take a look at it from the standpoint of where we can or have the ability to expand, it's probably in the southern plains states. Since 2010, those states' cow herds have reduced by 17%. And so when we look at it in terms of where we have the capacity to really expand the cow herd, it would probably be in the southern plains region. And obviously these calf prices have been phenomenal. We've had a tremendous run, and it's very rare that you have all three segments of production that are profitable in terms of feed yards, stocker operators, and cow-calf operators. And it's been a tremendous run for all of them, and something has to give at some point, and one of them are going to get leverage over the other. With cow numbers as low as they are, you have to believe that the cow-calf operator is going to maintain that leverage, and margins will probably get tighter for those other two segments here going forward.
Well, I want to follow up on that and talk specifically about the feedlot segment for just a moment. We've talked a whole lot about shrinking feeder calf supplies. How are feeders reacting to that, and what do you anticipate as we get into the summer and fall months in terms of fed cattle prices?
Well, the cattle feeders have been very profitable. They started turning a pretty good profit starting about last September after going through a long-term equity drain in that segment. The thing that's bothersome or burdensome to feed yards at this point is the fact that the inventory report on January 1 stated 950,000 fewer feeder cattle and calves outside feed yards. Yet since October as a whole, up until the present time, we've placed more cattle on feed. So the utilization rate of that smaller supply is going to become more burdensome as we go forward. And these feeder cattle supplies are just going to be harder and harder to find. And typically what happens is you'll see that they've made profits here over the past several months. They'll tend to have to give back some of that margin in order to get the inventory going forward.
Well, let's talk about cattle herd expansion, and you'd mentioned a moment ago the prospects of that, but clearly this drought's having an impact, and frankly, the amount of money cow-calf producers can get for that heifer calf makes it a little tough to keep some of those heifers back in the herd. What are the prospects moving forward for herd expansion in 2014?
Expansion's been a buzzword for the past several years, 3 or 4 years, where we really need to expand the herd in order to keep up with the demand for the product, obviously. But before you can expand, you have to stabilize the herd. And that's what we're looking to do at the present time, is just try to keep the herd from reducing on an annual basis. We think that going into January of 2015, that the U.S. beef cow herd will be larger, 200,000 to 400,000 head probably. But in the grand scheme of things, we're starting out at 29 million and we were at 33, 34 million not too long ago. Another 300,000 or 400,000 cows isn't that many in the grand scheme of things. And so expansion is going to be slow. You first have to stabilize it. Like you said, it's very evident that the prices some of these cattle are bringing, it's hard to turn the money down in certain cases. And obviously if Mother Nature doesn't cooperate with us, it makes it that much more difficult.
And real quick, Troy, tell us your projections on replacement female prices.
Replacement female market's going to remain strong. A lot of it's going to depend on Mother Nature and the moisture conditions and so forth as we go forward here. It's difficult for me to talk any of the replacement female prices lower, whether it be open heifers, bred heifers, or cows, or pairs. Just from the standpoint that we have very good support levels at current price levels. But if Mother Nature kind of cooperates and moisture conditions improve, we could certainly see $200 to $500 head improvement in those prices.
Amazing. Thanks so much for your time today and for your perspective. We appreciate it.
Thank you for having me.
For more information and expert market analysis, visit the website CattleFax.com.